right? These kind of fixed assets. So that would be written, that transaction would be written here. If you're selling your old truck, that would be sale, right? And if you have a gain, you can also write down the gain here. And if you are purchasing the truck and building and plant, that would be purchasing here. So all the cash items. If non-cash, for example, the depreciation, which you just recorded as a wear and tear, you don't pay actually from your pocket. It is non-cash expense, so you don't write down the depreciation in statement of cash flow, right? Financing, which means how money is coming and going out from the business other than investing in operation. So financing, you are borrowing the funds, it is a plus sign, cash inflow. Repayment is a negative sign, which is the outflow, right? Equity transactions, such as you issue the stock. It means stock is issuing, it is a positive sign. Why? Because you issue the stock, you receive the money. Paying dividend is a negative sign because money is going out from the business. Repurchase of the company stock, you are paying the money and purchasing the stock of your own company. So it's cash outflow. Right, guys? Any question? Okay. Then let's talk about the consolidated. I hope you understand the word consolidated, which means also other business segments are involved as well. So you just combine all the business segments. So statement of cash flows, you see cash flow from operation. What kind of operation you have? Net income, adjustment of reconciliation of cash provided by operating activities. When we talk about the cash flow statement, so we'll talk about all this stuff. So all this is coming from revisiting the balance sheet and income statement. You see that, okay, how much cash is involved, right? So why we write down net income here? And what do we mean by adjustment here? So this net income is, so for example, this $833 million doesn't mean that you have actually cash. Why? Cash can be above $833 million or can be below. Why? Because there are some non-cash expenses involved here. Sorry about my handwriting. Here, non-cash, for example, depreciation, right? So in that case, so this is a misleading figure. A profit is $833 million. Okay, we understand that, but that doesn't mean that it is exactly the amount that you earned in terms of cash. So that's why we are removing from or adding from this $833 million into some adjustment. So you see, they added something. So from operation, this year operation in 2000, and if this figure of 2010, so 2010 cash flow from operation is $1,363 million. So you see the profit is different than the cash flow from operation, right? So don't just get confused with the term profit and cash flow from operation. Okay, cash is something else, profit is something else. Investing, so you see, you purchase a plant and equipment and you sell some assets, it's like that, change in assets. See, it's a negative figure because you purchase more than you sell. Cash flow from investment financing activities. So you issue a debt, which means you receive funds in terms of loan, and this issuance of debt means you issue a debt certificate to the public in the form of bonds. Okay, I'm going to give you this much percentage as a fixed interest. All you have to do, purchase my bond, purchase my debt. So from debt you receive some money. So you also issue the stock, you receive some money, you repurchase your assets. So congratulations, we just got back our electricity. So here we go. You pay the cash dividend, you see, it's a negative sign, cash outflow. If you add all these, so you find out the net. It means net increase or decrease in the cash is 324. If you just pay close attention here, so $324 million is the same amount that is written on the balance sheet. Let me just go back and double check that one. If you go back and double check the cash uh, on the balance sheet, okay, I think this is cash and cash equivalent. So here, if we, because that CFO, that, sorry, that cash flow statement doesn't mention here which, wait a second, is that one? No, let me just, so it is 744, right? Wait, what was that? Here. So this year, 324, you basically, okay, let me correct myself. So this 324 is new addition to the cash, and old addition to the cash was 1561. So this 1885 is in 2012 the position of cash. So 1185. Let us see that whether this is the case of 1185 in the balance sheet under cash. See here, 11. Uh-oh, my bad. I did it here, right? So the net income tells you what's going on during the year. The key point is during the year. The retained earnings is going to tell you that what happened to the net income. The balance sheet is going to tell you that what is the position of the business on a specified date. And cash flow is basically confirming the situation of cash on the cash side of the balance sheet, right? And why we are confirming this cash, we will talk about in our coming lectures when we finally talked about the treatment, accounting treatment of cash and cash equivalents. But just to give you a taste here, because all other things are susceptible to fraud, but cash is most susceptible to fraud because you can manipulate the figures, right? But you cannot manipulate the cash. Cash means that is in your bank account, that is in your company's safe, vault, right? So if so you can manipulate the figures, and so you can show that you have a bigger profits, but on the other hand, you have a small cash, right? So as a shrewd investor, or as a person that I want to invest in this company's stock, whether this is worth to invest or not, then I would be seeing its balance sheet. If balance sheet is fraudulent and it shows that huge profits, and I just inclined to invest in that company, so I made a wrong decision. Why? Because I don't know the concept of profit and cash, right? So if you know if you know the concept of cash and profit, then you will be able to really make a smart decision whether to buy this company's company's shareholder or invest in the company or not, or even you want to do employment, or you want to do some job in that company to see your future. It's not like that you join the company, after 1 year the company goes bankrupt and you have a really bad reputation, or you become a very bad manager because you were the GM or the supervisor in a company that just got bankrupt, and the other companies are just, and that company reputation is very bad. And what happened, it also have a block on your career development as well, right? So as a shrewd manager, shrewd investor, or as a person to find out whether this company is doing good or bad, financial analyst, so you need to aware that cash is different, profit is different, right? Okay, so, and now we have something to talk about. Guys, you can talk about, we can do some illustration here. We have now electricity and my laptop is charging, so no worries. So now let me know. So we are doing this illustration. So just tell me, this is a, I think rather I should put some, yes, I think I should put uh, class participation, and that will give you some marks as well. We are doing breakout room activity. So I'm making a breakout room. There we go. You. So we have 11 participants. I think 3 groups going to be. So all you have to do, you need to write down your group name. So from each group, I would be getting single picture. Okay, I write down your group member's name. And before that one, please take a picture of this illustration. So remember, it is a must requirement for you guys to turn on your camera during breakout room activity. Okay, now please do that. Florian, Fabian, please join your breakout room. Nimesh, please join your breakout room. Anis, Constance, please join your breakout room. Florian, are you here? Fabian,